It seems like this is underpriced, right? I mean, like if the actual yield that IBGT is getting is about 290%, and this is pricing it at 190,
That
feels
is
like,
why we see this 2000% here.
oh, yep, that makes sense. Okay.
So right now, like if these stayed the same, right? So if IBGT stayed at 300% roughly, and the IY stayed at 190, and you were holding the YT, that means every time there's a payout of yield to the YT holders, that would annualize on the principal of the YT asset to 2,116% APY. So that's probably, I think we just looked at it like, what was it?
It's 290, I think.
300% APR?
Yep, exactly.
Is that right? Yeah, roughly 300% APR. So still pretty good, but like not mind blowing. It's roughly what you're getting just having the just holding. Anyways, it should be higher, shouldn't it? Welcome to today's episode of the Dojo Pod. We are technically pumping. I mean, I'm not going to call it a pump. Last week, Mara, you kind of picked on me about my portfolio and how it was doing and what I was doing with it. Well, I am now delta neutral. I have exited almost immediately after I exited. The market's pumped. So you're welcome if you were able to exit on that pump. But yeah, I decided to go delta neutral, back to my roots. Many of you guys know me as the delta neutral guy, the guy who was all in stables throughout most of the last bear cycle. And then thanks to Groot from the dojo, was able to enter long ETH, unfortunately, but long, relatively close to the bottom. And so I'm stabled up. I've been having a lot of fun getting back to strategies, getting back to being in the trenches of finding yield and not just being levered long on Aave, which was a great idea until it wasn't. What about you? How you doing this week?
Yeah, well, to be fair, it's always fun to pick on the person who, is making brave new decisions, whereas I'm just comfy in spot. Cue the meme of the beat up person with black eyes and broken teeth.
Yep.
But yeah, no, I mean, I think there's a lot of argument for being stable heavy at this point. There is a wild amount of uncertainty going on, with Liberation Day only hours away tomorrow. We're recording this on April 1st. Happy April Fools to everyone. And tomorrow we may be having a wild amount of volatility when it comes to, tariffs and responses to tariffs and all sorts of wild stuff. In terms of me, I am, for better or worse, relatively unchanged. Like I still have kind of a diverse portfolio. I am more stable heavy. I kind of end of this year sold most of my altcoin positions into stables. I unfortunately did not sell any of my ETH or my BTC. So, I have retraced a lot of gains on that. But, is that a death cross? What does a death cross mean, Steven?
Yeah. So, I mean, this is a term that we see in TA. It just means when the little EMA crosses the big EMA. A lot of people like the 821. I've seen some people use a 722. I've seen all sorts of different ones, but 821 is the one that the people that we know tend to like. And the larger the time frame, the higher the degree of validation of a trend change. So you can see here, we haven't had a death cross, which is where the little one goes beneath the long one. So this is an 8 moving average, an 8 instance or 8 time block moving average versus the 21 moving average. It has gone under. So you don't want the short one to go beneath the long one. And if we zoom out a bit, you can see we flipped what would be called a golden cross, I guess, or a bullish cross back in September. There was death cross, but it reversed back in September, and we've been bullish ever since. So I don't know how long is that? How many longs is that? That's a bunch of wilds. That is more than half a year. So for more than half a year, we were considered bullish, and for the first time in that 190 days, we have flipped back into bearish on the weekly time frame. I use weekly because daily flips a lot, right? Daily you kind of get you zoom out. We've been bearish. Had been bearish since February, which is I always have a hard time saying.
How about on the monthly?
On the monthly, I think we're still good. I think we're wildly still good, actually. Yeah.
And if that doesn't work, then I can always ask you to. I was just gonna say, if this doesn't work, then I'll just ask you to show me the yearly one.
Yearly, we're wildly good. So I'm not gonna get into the TA stuff, but if it crosses under the EMA, this is what Professor Keith, shout out to Keith Lay, calls the wait a minute. Wait a minute zone. It means the chart hasn't decided which way it wants to go yet. And it looks like we're almost getting into that fudgy area. Again, not a TA guy, but as you mentioned, macro folk are getting worried. If Patrick was on today, he would say that he's still convinced, over 50% chance of recession coming. There is that major indicator that's up and coming. Whether or not we'll see the definitive recession, it's unclear. As we've said in the past, there is a narrative amongst smart folk that Trump wants to refinance national debt, and to do that, he needs lower interest rates. To get lower interest rates, we effectively need to signal an actual recession, definitive recession, and then maybe that will trigger lower interest rates, which is a form of quantitative easing, not necessarily money printing, but we may get that in tandem. All of those things act as tailwinds. Don't fight the Fed is like the popular truism of equities. And so who knows? But that narrative is a compelling one. It's the popular story, I think. There are other stories being told, but I think that's the one that I've heard the most. Mara, do you have any other stories you've been hearing?
Yeah, I mean, I think it's as simple as what Trump wants to, bring back, manufacturing into the United States, right? Like, we've had a strong dollar. We've had, the U.S. spending a ton of money on defense for a very long time. And that has eroded down the middle class and made, a lot of issues, in the United States in terms of like, how we're able to kind of continue on with U.S. dollar hegemony. So, I mean, I don't know. I think people might think Trump is doing something brilliant. People might think Trump is doing something wild, off the rails. I think we're going to see a lot of what it is tomorrow. If we get like broad 25% tariffs across the entire world tomorrow, I think the market is primed to take a big leg down. I mean, if the stock market, if SPY, for example, drops 10, 15, 20%, I think we see Bitcoin follow it, and probably even more. Like, it doesn't feel like there's a lot of support up in where we are right now. And if we start going back down and testing those kind of like, low 70s, 60s numbers, it's going to be pretty brutal. And I think that could happen. On the other hand, we are hearing a bit more dovishness. It's been a little bit, less clear how serious like the administration really wants to like walk us off a cliff. I mean, the midterms, although it feels like this election just happened, the midterms will be coming up in terms of like macroeconomic terms. And it feels like they certainly don't want to be in a brutal recession by then. So the question is, can they kind of posture, can they art of the deal things enough to scare people to kind of be able to get some of these things they want, like bringing back, more manufacturing jobs into the US, to bring down inflation, to kind of like, have people pay for the defense spending that the US has been doing for a long time, while kind of like sticking with landing.
There's competing narratives here. Do we even want to we don't know. Right. So there's no reason to get too much into the weeds, but the question would be, does Trump want to bring down inflation, or is there a large enough incentive for him to want to refinance national debt? Like, if the refinance narrative is correct, we would want higher inflation, I think, in the short term, because you want you want a reason to lower interest rates.
Yeah, you want to like flip things to look like the economy is doing very negatively, so then the Fed kind of starts lowering interest rates to get, more money out there, and make it cheaper to borrow, including the United States doing it. And you're right, probably like not decreasing defense spending, but I think there's this idea of like making other people pay for the defense spending that we already do, right? And like, anyway, we don't need it. We don't need a LARP as macro analysts. I do think that like
neither of us are. We've just been hearing things, like that meme with the big ear.
The last thing I will just say is, I mean, like there is also this other narrative, which is like, Trump wants to take this Doge money, this tariff money, and then like do it in some sort of like stimmies back to people in the United States, like kind of back to his base. And if that happens, the last time we saw stimmies was, COVID times, and that really pumped the crypto markets. So, there is this, who knows if that's even a real thing, but that is one of the more bullish things people are saying. So it'd be interesting to see how it plays out. I continue to just say, expect a ton of volatility and try to find ways to kind of, profit from that. I'm not a trader.
They're like stimmies into meme points. That would be tragic. Okay, let's refocus. There are some other things, like just bits of news that I don't think can be totally fleshed out. So again, today we are seeing some relief from the like down only action. I wouldn't say it's enough relief to get excited about, but at the same time, we've seen this rumor, or not rumor, but we've seen this narrative that Winter seems to be pouring out some of their assets on the balance sheet on this pump. Now, to what extent this is true, I don't know, but a lot of the assets that they do market make for have taken large hits, ACT being the one I think that took the largest hit. Some of the ones you might know, QuickSwap, Kava, it's an entire chain, and then DEXE. Most of these are not down 50%. They're down like 20%, which is still a lot. Some down only 3%, 5%, but because they're going against the direction of the market now, the thesis is Wintermute seems to be offloading. What that means for crypto in general is it's one more potential systemic risk to consider. That if your token is being market made and a market making budget runs out, or you are regardless, you are like beholden to that market maker, and it is unlikely you will have them employed forever.
I'll just say, I know very little about this. I will just say I think it's probably very unlikely that Wintermute's actually just like dumping all these tokens. First of all, we probably have a very incomplete picture of like who they're actually market making for and like what the supplies are of these tokens. There could be other parties involved. Second of all, their job is to buy and sell. And like,
true,
it would not make sense for them to just in a single candle dump everything. Like they are very good at what they do, and single candle dumping, although, can be satisfying and cathartic in one way, is probably, not the most efficient way to kind of get the most value. You can see that tail all the way down there. Like you losing money by just single candling this thing out. So a little hard for me to believe. I know people love, shaking their fists and getting really angry at market makers. It's kind of the classic thing. We did also see, I think, one of these Southeast Asian market making teams actually do this like a week or two ago. But, Wintermute's so huge and has so much to lose in terms of reputation. It's a little bit hard for me to believe that this is the case. But, maybe.
You know what? I like that case. Let's not spread rumors unnecessarily. A way to keep me in check. So on the other side of this, back in the DeFi world or DeFi realm, things have been exciting. So I will say like macro tends to be kind of... it's a mix, right? You have the doom and gloom of price action for both equities and crypto. You have the incredible excitedness of a lot of funds and people who are getting ready to, I think, participate in DeFi, or at least who think like Bitcoin has a lot of tailwinds up and coming. Not yet. It's like, all this pressure building, hopefully for a big explosion upwards in the eventual future, whether that's this year or next year, hard to say. But there is that, I think, that building excitement of legitimacy behind Bitcoin. What that means for all of our favorite altcoins, who knows? But while all this is going on, sort of in the peripheral, DeFi itself has been neat, has been exciting, and some things have been happening. Let's start with the most degenerate thing, because I think we haven't talked about anything degenerate for a while. And I think no protocol fits that bill. I'm going to give you a massive warning here that one of the reasons why I'm talking about this is because it's funny. The second reason why I'm talking about this is because I want to warn anyone who is about to see Tomb Forks make a second rise. Mara, you were around for Tomb Fork season last cycle. I think you probably played a few of them. I think we all did. This is something similar to that. And if I just asked you, like, what are the percent of Tomb Forks that have survived?
0%. 0%. Say that with almost 100% confidence.
Yes. And as a result of that, you guys should know that when you see the words algo stable, you should be terrified. Now, I think USDBR is trying to do something different, but it is an algo stable. And I only worry that people may have gone over to Infrared or gone over to Stride and seen, USDBR honey and thought, oh, wow, what a great stablecoin pool for 120%, and then just aped into it without knowing what they were investing in. So let's explain what they might be purchasing. Many things are happening here. Like, it is technically 94% collateralized, which is not bad. But to my understanding, the way this coin works is it's not a traditional Tomb Fork, but it's also not remarkably better. The way this works is that when USDBR goes above peg, so above the threshold price, so above 1.02, it rebases, and the additional USDBR minted goes to, and I think this is right, the stability pool over here. And also, of course, Gnome staking. So Gnome staking gets some of this 112% APR, and that's cool. But there have been many cycles where it just hasn't rebased. So because it hasn't rebased, no one is getting USDBR. So what do they get instead? Well, instead they get gnome emissions, just tons and tons of gnome emissions. You can see here somewhere that the gnome earn gnome with 0 impermanent loss, right, and high APY. Yeah, so you're just getting a bunch of gnome emissions, and that probably is not going to be good for the gnome price. Maybe it is, who knows? Gnome market cap is so low that even a few big buys could really spike the price. But my worry here, my doom case scenario is that the buy pressure on the stablecoin is stagnant, can't rebase, and so as the yield is fully reliant on gnome, that becomes disinteresting and people rush to exit. And as they rush to exit, the NAV continues to get pushed down until we get maybe not a fast death spiral, but something akin to a death spiral.
Well, there's a few things here. If you just go back to the staking side, and first of all, I'm not playing with this, and us talking about this does not mean that anyone else should go play with it.
It is just bearish about it. It doesn't mean we hate it. It doesn't mean we love it. But neither of us are in this for full disclosure. Yeah.
Well, so one thing is there is a big difference in that there's proof of liquidity. So there is incentives that are coming. You just showed it up on infrared. That means that part of the system is being propped up by BGT emissions that are coming through, which is a big differentiator, right? These,
good point.
Tomb forks of a yesteryear did not have that kind of support. And so they are getting kind of supplemented by 120% APR paid in BGT. It's only 1.5 million. So it's not like this is scaled wildly and it's at 10 million, TVL in this pool or something like that. But there is, an additional source of yield outside of GNOME itself. But yeah, and that's coming from this pool, which is USD BR paired with Honey, which is they're calling the gauge pool. And then pretty much everything else is just receiving either GNOME rewards or receiving USDR based off of this rebase. I don't know. I think we're probably going to see, if this has even a moderate amount of success, I think we're probably going to see a lot of this, especially on BarChain, but also on other places as well.
Sonic.
Phantom was the place for a lot of these, so very brutal. If you want to see kind of the pain that you can have, if you want to go pull up the chart for Kimadow, which was not a
well, that was an old fork.
It was an own fork, but similar in terms of these kind of games, it's up 13% today, but I'm pretty sure that the total FDV of this thing is 5 or 6 million. Yeah. So
4 million. Yeah.
So the FDV is 5.8 million. I think that this thing, I don't know if you can go back far enough in time, but it was massive. Really big. I
participated in the pre-sale here, or the copper launch or whatever it was.
Yeah. Right. So, you can see this thing is down only, it looks like I can't tell what the FD, it went up to $5, it looks like, or something. And now it's down to 30 cents. So, just a cautionary tale of how these things can fare. If you probably went and looked at Tomb, the token itself, that's probably near zero.
Was Tomb the name of the Phantom equivalent?
Yeah. Yeah.
Yeah. And then there was, it was Tomb and it was T-Share. T-Share was the
T-Share. So this thing was supposed to be worth 1 Phantom, if people remember. And so right now it's worth 0.0044
008 Phantom or 00.
Right.
It has look at that. Wow.
So it was supposed to be worth one Phantom. It's now worth hundreds of a Phantom. So people that were in this really, really got wrecked. I'm not saying, I'm not trying to put any evil on GNOME necessarily, but I do think it's worthwhile for people to remember the history of how these things tend to go. And, odds are that eventually GNOME will have a similar fate. But it is fun to play with, and if you are super, good at playing these kind of money games, fast money games, and if you think you have some sort of edge or you just really like to gamble, could be fun to play for a little bit. On the other hand, if you aren't doing that, you probably will get wrecked.
Yes. So. My major caution to people is not don't do it. And it's certainly not do it. My only piece of advice is that you need to understand, despite what anyone will tell you, despite any marketing, that it is a PvP game. It is not 3-3. It is not one of those cases where if we all work together, we all win. It is cut and dry. It is a PvP game. And first in, first out, those are going to be the winners. You can go play and compete, but you are competing against other people. And that means you could lose. And, the more bearish market conditions get, the fewer winners there tend to be, and all those things you should keep in mind. So I could give you rules of thumb, but I'm scared to even do that. It is neat, and I do think that BGT gives it a major tailwind, and it's kind of a curveball. It's a variable that we didn't have last cycle that may make it last longer, but like I would not consider this a stablecoin investment. I would consider this like
hyper risky,
a meme coin investment that maybe you can get 5 to 10% ROI on and then exit.
So here's a quick question for you, and then we can probably move on to other stuff. Do you think that this is net positive or net negative for the BarChain ecosystem? I mean, they are spending money on this, right? There are emissions from BarChain going towards this. Is it a good experiment? Like, is it good that they're, supporting these type of things with emissions? I mean,
yes.
not like the team is doing it directly, but like the validators are doing it.
I will say yes for two reasons. One, it's a money game, and I think that money games are interesting for their own sake. I think algo stables will at some point need to exist to solve, well, maybe not. I mean, if money literally just comes on chain that is one-to-one collateralized with off-chain dollars, maybe that issue is not a big issue. But the stablecoin dilemma has always been that to have a decentralized it still wouldn't be decentralized. Yeah, it's still the same dilemma. To have a decentralized stablecoin, it has to be over collateralized, which means you can never have as many dollars, there's inherently more demand for, than you have TVL of volatile assets, right? It's impossible. Like, you can't over collateralize these dollars and have more of them than the collateral itself. So algo stables solve that problem. The only issue is they're like magical. They're working by math and funny mechanicals. So I think that money games like these should continue to be played, and they should be incentivized by the people interested in that research. But the participants should also know it's a money game, and it's a PvP money game. So it looks fun, and I'm sure people still have a chance. Well, I'm not even going to say anything that might be bullish, might lead people the wrong direction. It exists, and I just want you guys to know it is not an over-collateralized stablecoin. That was my major point of information here. It exists. It is not an over-collateralized stablecoin. It is not it's not issued from a major issuer. So if you were, looking at stablecoin yields on infrared, which I do think are fascinating, just know what you're dealing with. It's also a bummer that RUSD has gone down to 18%. Still good. And Goldilocks assumes that the additional APR from the implied APY, from the airdrop will be another 7%. But, 25% is less exciting than the 50% it was 2 days ago, 3 days ago.
But that's still fantastic yield. I'm actually in this pool. So I recently moved. I recently moved from, so leaving alone the algo stables, which is a cautionary tale of what not to get into if you don't know what you're doing. But I'm still farming on BarChain. I was in the PayPal USD paired with Honey pool for quite a while. That printed for at least 5 weeks or something like that.
15 to 22, kind of.
Yeah, it was pretty good. And so now I've transitioned over to the RUSD Honey one. It was like 20% yesterday. It's coming down. I think that's because there's a lot more TVL rushing, and actually BarChain
18 million, good for them.
I know. Yeah, it seems like there's obviously a big demand for stablecoin yield. So a lot more TVL coming in, which actually is good in some ways, because if you did need to exit it, there's a lot less slippage kind of getting out of it, which is very nice. So anyway, I'm in this one. I think it's still pretty good. I think in general, the proof of liquidity on Kodiak is pretty decent. There are some good pairs. I will just caution for people, if you aren't doing a pair like RUSD Honey, which is like for like, if you are entering into the islands, which are essentially concentrated liquidity managers, you can still get torn up. I was talking to someone recently who's in the BarChain paired with BTC one, and they were trying to decide if it made more sense to go into the Kodiak one or stay in the BEX one, which it seems like have relatively similar, I don't even know what LBGT is, which have relatively similar APRs. And so the BEX one is a full range liquidity pool, and so you're going to experience a ton less impermanent loss if you just type in Bitcoin.
Right.
Whereas the
BTC on BEX, this one is going to have way less impermanent loss than this one. This one has a higher headline yield. You might think, oh, same two assets, same experience. Not true.
Exactly. And also there's a lot less TVL. This had more TVL yesterday. It was 70% for the Kodiak one and 40% for this other one. So
wow, people got in, got hurt, and then got out.
Yeah, I think so. So do be careful with the Kodiak pools. I think Kodiak's cool for stables, cool for like pairs. but it could potentially be an impermanent loss machine for mixed delta pairs. Not that I'm throwing any shade at them specifically, but like historically, all of these
game for those.
All of the CPV vaults tend to tear people up. Anyway, go ahead. What were you going to say?
What I was going to say, I mean, two things. One, like double tapping, which I know like our buddy, oh gosh, what's his name from Veda, Josh. He would always say like double clicking. Yeah, I can't stop saying it now. But going back to reservoir, which I like to say in a French way, probably not a French way at all. They were initially, people had some discomfort with the fact that stake RUSD, which is RUSD minted against locked up SRUSD. So effectively, you're not putting any new you're not putting anything new in circulation that's not fully backed by USDC, was like, 90% of the advertised TVL. So it wasn't that like there was no backing. That wasn't an issue. Everything was fully backed by like USDC predominantly, but they didn't like that the TVL was sort of kind of misrepresented. 90% of it was like, looped assets against itself. This is similar to like Frex against SFrex. Now there's no longer the case. So yes, stake RUSD is still a meaningful portion. It's 90 million, but now it went from 90% of the total TVL to now 50%. So we're nearing on 180, and 90 out of 180 is exactly half. So it's great to see this. It's great to see 17 million USDC just as idle reserves for redeemability. That means this is highly liquid to get in and get out of. And you know that we have been like, since we met the reservoir team, and we do love those guys, we have been like pestering them and saying, hey, we'd like to see like more backing from other like more diverse assets. And they always said, we're going to do it. Like we're working on it. And it seems like they were telling the truth the entire time. Now, Smokehouse USDC, which is effectively, as far as I understand, Smokehouse managed vault on Morpho, like lending, is 35 million SUSDE. So generating points, generating an intrinsic yield, 23 million. I think part of this may even be short expiry. And then you have Stakehouse USDC, very similar to Smokehouse USDC. Some on-chain T-bills, very, very small portion there, and then like liquid USDC. So it's been good to see this, and just their TVL shoot up from, 80 million, maybe 50 million when we first met them to now 173 million. Nearly 90 million of which is backed by USDC.
And let's just check into the IPOR and the actual like loop that's happening. This has been, a very popular position because it's a loop that has been quite favorably yieldy, with a dash of point speculation as well. Yeah, I don't know, 16%. So it is down a bit here, but like, historically this has been well above 30% APR.
Well, yes, but here's the thing to know. So if we go over to Goldilocks, and extrapolate the value of a 1x point multiplier, which you get on SRUSD when it's looped. Well, no, not on IPOR, unfortunately. But you can still extrapolate the value. So fixture APR 18.4% on 2.25x multiplier. You can see that I can't bring my mouse over there because it'll go away. But on the top right, 2.25x multiplier. And then you just divide 18.4 by 2.25. You get 8.1%. We'll call it 8.17. We'll call that 8%. So it's 8% times 1x multiplier. So yes, you only get that on the principal with IPOR. So you're getting another 8%. So call it 25%. 25 is not bad for a stablecoin yield. It's pretty good. But where I think the magic happens is on Euler and Dolomite. Now, I don't want to blow up my own positions. Luckily, Dolomite has some pretty thick, deep Boyko liquidity. So I'm not too scared about that. I personally am in that one. Do you remember when Boyko ends?
I think it ends May 5th. We're May 6th.
Okay, so we got a month.
Yep.
Kind of scary. So here you can see it looks like this is a big position, guys. It's not. It's just a small amount of money leveraged a lot of way. So it's the net value between these two things, which is I think 11,000. So basically, and you can see the value here. I am getting 31.59, 31.6 effectively percent. APR net. That's my APR yield. I'm getting that daily. Like I'm realizing that in real time. There's no points involved. There's no emissions. It's literally just what I'm realizing from the intrinsic yield of SRUSD versus the borrowing cost of Honey. I will say I shouldn't have borrowed Honey. I should have borrowed USDC, which has a better borrowing rate. Yeah, USDC is 3.05. I'm borrowing the one that costs more, but I think Honey is slightly more risky. So being able to short that is kind of a good thing. Nevertheless, 31.59% to me is amazing. I'm very happy with that. and I'm getting points on the notional. Now, Mara, explain what points on the notional means.
You're getting points on the full exposure that you have to the position, so the full $97,000 rather than just the net of the 97 and the 86.
Exactly. So with the IPOR position, by the way, love IPOR. Darren is amazing, great team. But because it's an SRUSD, RUSD loop, you're only getting points on the principal. So if I had like 11, let's call it 10,000. I had 10,000 principal, and even though it was looped up to $100,000 notional, I'm only getting points on the 10,000. Here on Bolamite, I'm getting points on the 100,000 instead of the 10,000. So effectively, I get 10 times the exposure to the points. So remember, that's 8%, 1x multiplier. 8% times 10 is potentially, it's an implied yield. It's an implied points yield of another 80%. So that puts me at 110% on a stablecoin position. Again, I'm not like begging you guys to go dilute my bags because I know I get yelled at about that a lot in the dojo. But I do want to point out things that I think are remarkably compelling. So there is that. I would like to see Reservoir on Pendle. I'd like to see them on Spectra. I know they're like they need to create 4626 compliant vault or something before that happens. But also Euler has these same things. And there's another asset that I kind of want to pick your brain about on Euler because it's, as far as I understand, it is a auto compounding wrapped version of IBGT. Have you heard about this?
I have not. Oh, what's it called? Is it called LBGT?
No, it's not LBGT. It's Ori, which I think is Ori
BGT. Okay. Yeah.
BGT. They supply APY is kind of misleading because it's like the APY. They should use APR here, in my opinion, because that's like you can't really talk about these things in APY terms because the difference between what is it? It's the natural log of 1 plus the APY will give you the APR. So let's do the natural log of 1 plus 2078, brings it down to 783%, which is still crazy high and potentially not even correct. So that says the real APR here is 763. And so the borrow AP would be natural log of 1 plus... Oh, okay. Sorry. That was not supposed to... I did that wrong. It should be 1 plus 20. Is that right? 2000? Yeah, 20.78. Because we should use, which would be 300%. So 300% is the actual supply APR. And that's closer to what we assume for IBGT. So that kind of makes sense. Natural log of, what's the borrow? Actually, 97 is really good. That's not going to go up too much. Okay, so that's 0.97. You guys can't see my math. Is 67%. So we have a 308 and 67 arbitrage. Not a ton to borrow here, by the way. So that's kind of like that's the bottleneck. Keep that in mind. That's the issue. But still, it's fun to speculate on the math here. We could do the math. It's only a 4x multiplier, so you multiply 4 times 3, which is 1,200 APR minus 67 times. No, sorry, you multiply by 4. Yeah, 3 times 4 is 1,200% APR minus 3 times 70%, which is 210. So you're still at like 900% APR. I know that was a lot of crazy math. Don't hate me, guys, for all of the not being able to show you all the visuals there. But it's been neat looking at it. Again, there's virtually no liquidity. There's $51,000 of liquidity there. If you have a $500 position and you want to go crazy with it, go ahead.
What are the earn for the BarChain markets? Like, how much can you get paid on your BarChain?
Ooh,
if you go to
what
you go to earn?
Yeah, good point.
Right?
Earn. We'll just do
BarChain. Can we just choose BarChain?
Bara.
So yeah, 100%, over 100%. Wow.
Most of which is an organic Bara paid to you, and then also wrapped Bara from emissions. That's pretty cool. So you could just get 100% on your Bara, and then you could try shorting it, but it's not much of an arbitrage. Well, it is right now, kind of. It's 55% cost to short versus a 100% yield. So, I can't do the math in my head about what that would be net. It's not as simple as you might think it is. Yeah. So that's pretty good. It's not bad.
No, it's so interesting having BarChain be an asset that is so yieldy that it is consistently very expensive to short it. We had this similar like with ENA, with like staked ENA. That was also one that, people are trying to pile into. But this one, there's just so many options, whether it be on Euler or Dolomite or Infrared or all these different places to get yield on your, Barra or your BGT or other kind of derivative. It's fascinating to see just lots of people that want to, be neutral on it, but can't because it's just so expensive to do it on chain in a place like Dolomite or off chain in a place like Hyperliquid.
Yep, exactly right. I found the SRUSD markets, which are here and here. So these also exist. Just so you guys have, like, if you want to diversify the places where you play with things, there 2.7 million here, 2.4 million here. Both of these get points on the notional. I guess the liquidity here is comparable to the honey liquidity on Bolomite, but not the USDC liquidity on Bolomite. So could be another place. Also, both allow you to auto leverage and multiply. So I think that's kind of neat. And if you wanted to cheat loop into one, then cheat loop into the next, you could do that. There's just ways to play, I think. Let's see. Stablecoin. Yeah, these are all stablecoin yields. Some of them have some of these SUSD yield this week is up to, I think, like 8%. Bolomite has a really great API for this. They do the exact same math that I do, which is why I get so excited. And they're projecting 6.22%. And I trust that because every time I measure using the correct method, which is take the weekly emissions and just annualize that against current staked USDE, then this is the number you get, 6.22%. So that's pretty cool. It's twice as much as it was last week, if I recall correctly. It might go down again because we've seen really weird price action this week. Who knows? But 6.22%. So that makes a lot of positive loops. I think you can even go over to strategies and you'll see the looped. Well, hey, look, you can auto enter in looped SRUSD. That's awesome. And they give you a really big liquidation buffer, only 7x. And then SUSDE, they also give you that. I don't know if there's points yet. I think Athena is not going to relaunch the points program for season whatever until the 24th of this month.
Wow. Yeah, it's interesting. I mean, they're moving into the whole new world of having their own potentially two different chains and all sorts of stuff going on. So maybe it's all tied to that. But, it will be interesting to see how the, SUSD and USD farmers of the world handle no points. It's like a little bit like, taking the drugs away from an addict or something like that.
But they've locked people into staying in because some people are still vesting their emissions, right? Their airdrop?
Yeah, I think so. Exactly. Mm-hmm.
So even if they wanted, they're stuck there even without a season for a month. What I read on X was that the next, there's a month gap between the last season 3, I think, and season 4. So it's kind of an interesting experiment to see who's going to leave and who is stuck in there to farm their yesteryear's emissions. Are you excited about Ethereal? Is that the name of the thing that they're going to launch their own perp decks?
Oh, first of all, I'm not sure if it's them launching it or if it's like a team that's kind of connected to them that are launching it. But, I would say, Athena, I respect them a ton. They kind of started the War of 1,000 Ships on the basis trade, which it seems like there's so many kind of competitors on them. So I respect them for, doing a great job in tokenizing that and branding it and kind of getting everyone comfortable with it and opening up this whole new design space. I also think they just crush it in general in terms of being everywhere, on all these different chains, on all these different platforms. You can always go and find USD. And for a long time, they were one of the most competitive yields out there just across the board. They also seem to have actually been bridging the gap between TradFi and kind of other people who, want to get yield and interact on chain, but don't actually want to have a non-custodial wallet and stuff like that.
They popularized the what is it, Copper block?
Yeah, exactly.
Mechanism?
So which is keeping essentially getting credits for on-chain liquidity on a SEX, which is a pretty fantastic way of making sure you don't get wrecked like people did with FTX or people were worried about with Bybit and then ended up not happening. So I think they've been very innovative. I think they've brought in a lot of new and interesting ideas to the space. So I wouldn't fade them. That was a long way of me saying I respect what they're building and I would not fade what they're trying to go for. I think it's ambitious and I think, it will be interesting to see how all these chains work. I also think they're trying to build permission chain that may have KYC and only kind of certain people can interact over there. And I also generally think that, DeFi might be heading in that direction. So if they want to kind of go and be the vanguard, it'll be interesting to see their success.
Yes. We will see what effect, and we were already seeing with the tariffs, whatever that protocol is, we'll see the effect of people farming their own funding soon and what incentive alignment that leads to. I wanted to find Ori BGT, but I don't see it here.
Is it called Love Bear?
Well, it's on Euler. It's called Ori BGT.
Oh, yeah. I don't know.
But I can't seem to find origami.
Is it
Love ETH, love Tendies, love BTC, love Usual, love Bear. Maybe it is love
maybe
Bear.
all vaults? Maybe your own?
Yeah, here we go.
Yeah, there it is.
That's it.
Yeah.
Oh, and Home. So Home is the liquid max looped Ohm. Wow, that sounds... it's grayed out for a reason, probably. Origami Boico USDC. That's kind of neat. It's interesting they don't show estimated APY. Infinity. Dude, that's great.
Yeah,
Infinite APY. That means in one day you have infinite money. So do consider... I'm kidding. Don't consider anything. I don't know how that works. But there is.
I think that's just the vault from Boico where they had funds deposited into them. And so that's part of the liquidity that will unlock in a month's time from now.
Okay. That kind of makes sense. And then, so we did the same math and we got the same answer. So they're saying 301% APR. I don't know if that's what Infrared says for staking. That's crazy if it is. I mean, what a number. Yeah, it is pretty much 290, 300. We'll call that roughly the same. APR to APY is 1.92K. That's where they're getting that number from. I don't know if this is trading at a premium. I can't imagine it would be if it's as easy as like zapping in and zapping out. You are selling the current share price. Okay, maybe.
There is also
you want to know all these things, right? You want to know what the fees are. You want to know what the entrance cost is. You want to know if it's going through liquidity or if it's like going through NAV. All of those things are remarkably important. You want to know if you can buy it under peg through Kodiak or Ooga Booga directly. So while it is compelling or at least interesting with, effectively a Bera with premium APR of 300% versus maybe shorting at 55%, really nice delta neutral yield. In fact, for like 1,000, for a very tiny portion of your portfolio, it might be worth playing with to sort of get a feel for it. But leg risks, entry and exit. And Mara, you are, I think, the leg risk master. You enter and exit things, I think, better than most people that I've ever met. What kind of considerations would you have when looking at something like this?
The first thing I see is it says exit fee. So I wonder if you put a number on there, if it populates with like what they're going to charge you to do it. It says 0. Okay, so maybe it's, I don't know anything about the docs on this in terms of like how it works in the fees, but like the first thing you want to be paying attention to is the fees that they're going to charge. It looks like maybe they're doing some sort of kind of like introductory period where there is no fees to get out, which would be fantastic. It just also, for people to like, want to play with this, like you need to understand, like this is a weird wrapper of a wrapper of a wrapper. It's like BGT, which is a soul-bound token, which you have to farm, which you're then farming using Infrared, which is like one of the kind of more powerful players on BarChain, but still a derivative of a locked asset. So like has a pretty wonky peg. It can go trade at a premium. You should have probably always traded a premium to Bera,
but at a 43% premium right now. I think it's because of probably Ori BGT and these new rounds of BGT incentives, but that's a very high premium. And so just so you know, if it went down, I don't know what its NAV is, but I think it's probably around like 1.1 at this point. It could go down to 27%. Like,
why is it? The NAV is just 1-to-1. It's always 1-to-1. You can always trade one BGT for one Bera.
Oh, right. So IBGT is not an intrinsically appreciating. Okay, so that means there's 43% premium, which means it could go down.
Yeah.
40. I mean, that's 42%, isn't it? So it can go down 43% in any given week for any particular black swan. It should.
You know what? We've seen this,
but go ahead.
We've seen this happen. I mean, I think that the premium should probably be something above 10%, just because like you can't actually do a lot with it, and it's an asset that's earning 300%, and there's all sorts of great things going with it. But I will say that like we have seen whales exiting in size of IBGT, maybe when they just want to take profits on Bera, and we have seen it like crash. I mean, you can see that it's like super volatile. So, you're dealing with multiple pegs here. You're dealing with like the risk of like BarChain, you're like the actual token exposure to Bera. You're dealing with like some sort of kind of, risk premium of like how much extra should this be worth over one Bera? You can see like pretty much it's never gone lower than like 1.1. So I think that's not like NAV, but it's a pretty fair place where you can kind of like value it. But like 40% above, I mean, you need to start doing the math on like how, if it would go down and drop, say, from a 1.47% premium to just a 10% premium, how much would you lose and how long would you need to like be farming something at hundreds of percent or thousands of percent APR to kind of make up for that? So, there's a lot to consider here.
Quick experiment there, because we can do that. So you could, I'm going to annualize this and no one get mad at me. So it went down 25% in 9 days, right? Which is effectively 25 times 365 divided by 9, which is effectively negative 10,000%, right? So no, like under that specific time frame, your APR would not have made up for it, even at 300%, right? So a 300% APR does not account for this. Now, granted, if we do that same, like let's just say it was from here down to here, so that's 37 days, negative 34 over 37 days, we can do effectively the same math, which is 34 times 365 divided by 37, which is negative 335%, which actually is about break even. And because you're getting that consistently, it's not going to go lower than this, and you are already positive. So this is one of those things where you have to realize in the short term, very easy to get wrecked. In the long term, you are beating the odds probabilistically. It doesn't mean you will win. It means that you have a higher likelihood of winning. Like I would say that it is positive EV, but that doesn't mean that it is like wildly positive EV. So, EV, let's just say it's a, 51 EV, or effectively you think that like you will win at least 51% of the time. Okay, well that means the other 49% times, the other 49 times you lose. I think this is probably higher than 51%. But what I'm saying is I think it's positive EV. The longer you wait in it, but if you are like trying to be cash on cash and you want a short bearer, then the biggest leg risk, in my opinion, or the biggest tail risk, is that the right word here, is funding rates. That's my assumption. Are you on the same page, or you disagree?
No, I completely agree. But I will say that like it is impressive to me seeing kind of proof of liquidity working where like, essentially all of the BGT emissions get a 40% boost, 50% boost almost. So we saw what was like 20% or something like 18% on RUSD. That's including the like premium that you're getting for being paid in IBGT, which, is trading kind of above its inherent value of 1-to-1. The only problem I see like with all this stuff is that like it seems to be incredibly concentrating, right? So like you would never want to farm this without using a liquid wrapper because you're just like losing out on such a large percentage of the yield, like a third of the yield you're losing out by farming this kind of in a native way. So you really get forced to use something like IBGT or like Stride, or I think there's even a new one coming out maybe as well.
Well, I think LBGT is probably another one.
I don't know what that is, but so it is, like centralizing in that like it seems like infrared will get a lot of power. I'm farming it. I think it's an interesting airdrop. That's the other piece we're not considering in all this is like there could be other airdrops from all these other tokens launching. So you have infrared, which will have a token, origami that will have a token, Kodiak will have a token, all these different other kind of like, ethereal tokens that may even additionally boost the yield on all this stuff. I think infrared's probably going to be the biggest because like clearly they're positioning themselves and kind of already have quite a bit of hegemony and being $2 billion of the TVL. And it seems like, as long as this proof of liquidity system is going on and being successful, infrared will be very successful as well.
I'm on the same page. I think I don't know. I mean, it looks good enough for me to maybe do a little punt out, but we'll see. We'll see how I feel in like a couple hours when I'm reevaluating some of the yield I've generated this week. There's also still Noble. I know they've had like some ups and downs. It's still a decent semi-liquid. I mean, actually it's liquid, kind of. Like you've redeemed some. There's a little bit of a fee, right? It's like a few bips to exit immediately, but 15% T-bill yield. The only terrible thing about it, and it's kind of tongue-in-cheek, is that you have to use Cosmos.
Right. No, and that is like, for a lot of people, it's a huge pain to go get a different wallet and do all this stuff. So yeah, I mean, longevity and yield is a really valuable one, and this one has a points campaign that's going on for another like 80 or 90 days. And so I would, if you're in the yield vault, I'd probably enter in like 70 or 80 days from now. So you're not out like, waiting to exit when everyone else is kind of thing. But, for the next couple of months, I would imagine this probably bounces around between 13 and 18% APR, which is pretty good for like semi-liquid position. So I like it. Fluid used to be my option for this. I used to like lending on Fluid to kind of like have a portion of my liquidity that you could
and
keep liquid. And is it so good? I thought it was down to like 6 or 7%. 6
or 7% for lending is one of the best lending rates you can get. I mean, I know it's not amazing, but it's better than Aave, and it's fully liquid with no fees to enter and exit.
That's true. That's very true. And no slippage in and out. Like, especially if you're trading at size, like slippage into getting from USDC to USDT or some other asset. Honey, for example, can be significant, can eat up, major portions of your yield if you're not careful, if you're swapping in and out of things too frequently.
100%. If you're doing the smart, I don't even know. Smart lend. They have like a new smart, we don't have to get into it now, but I saw a new smart category. I think it's smart lending that has some additional yield, but I would imagine like entering and exiting does have some risk because it's NLP and not just one-to-one lending. I wanted to look at FFX real quick because I just right now at this moment got a message from Cyril from FFX who said FX Save goes live tomorrow. Now, for those of you who have listened to any of the recent podcasts, I have been very excited for this particular product for a while because what we should see, what I anticipate us seeing, is a roughly 7 to 8% intrinsically yield-bearing stablecoin called FX Save, which is the liquid wrapped version of the FX USD stability pool, which should have, I think, Morpho integration is going to be one of the first ones. We'll be very excited to see that leverage. I don't know who's going to be curating that, who's going to be like providing liquidity there, but I'm excited for it. Just one more DeFi Lego. And then also we should see it on Spectra. I'd like to see it on Pendle. You guys know I'm a Pendle maxi. In fact, we're going to look at Pendle before we hop off. But yeah, so that's cool. So FXUSD stability pool wrapper, liquid wrapper should go live tomorrow. So you can see I have a position here.
Your deposit here. What's the theory behind it? I mean, 9.85% is good, but not some of the 30% yields we've been talking about in other places. What's your theory behind being in this pool?
So good question. One, FX is going to do an airdrop, and I just I work with the team, so I like them, and I just want to. I like to use what I talk about is one thing. So I'm not saying it's the best yield out there, but it's liquid. And so you have convinced me thoroughly that you should always have a chunk and a not insignificant chunk of your portfolio in an effectively liquid position. So for you, USDN, I think you make a very compelling case there, 15%, cash on cash, effectively liquid, very small exit fee. For me, I'm in this 10% FXUSD, effectively liquid. If you do withdraw though, you can get it immediately. I would never do that because 1% fee is no way I'm going to do that. If I can just wait 30 minutes to get it without any fee, I would definitely go the 30-minute route, get it fully liquid as an LP, and then just, exit the LP. So there's a tiny bit of risk there with LP. Who knows what there's going to be slippage or anything, but that's sort of been my thesis. I already made $210 in emissions there. So that's a nice steak dinner. Been in here for a couple of weeks, but this is my liquid position, right? And there's going to be an airdrop. I don't really understand how that's going to work, but FFX said, hey, we're going to do an airdrop and it's going to have like a very, very small claim window. So let everyone know as soon as it happens. It's going to be for DeFi power users. So even if you haven't used FFX, you might qualify for it. It's the weirdest thing. I don't really know why or how it's going to work, but it's going to happen. So be aware of that. And then I just wanted to I don't know. I felt, it's probably wrong, but I just felt like by being in this, I'd have first access to FX Save, which is a composable asset that I actually like for the sake of itself. Like it's one that I would like regardless of whether or not I like and work with FFX, because a composable stablecoin with a, let's call it 7, if you bearish, 7 to 9% intrinsic APR is a very compelling asset for leveraging and looping. And they're going to be on Spectra, so we'll see how Spectra sort of prices it.
Yeah, makes sense.
Finally, Pendle, because I did want to point out that, I don't know what that is. I want to point out that BarChain, Pendle has gone live, and if you just were scared of volatility, you could get a fixed rate, 190% on BGT right now. And that's, as far as I understand, it's BGT on BGT. So fixed rate, fixed date for the next 85 days. It's kind of like a BarChain yield, but there is that 45% premium you got to worry about if that premium goes away. And then you could short it, of course, on Hyperliquid. It would be really good delta neutral yield. Just one other option you have out there. All right. Anything else for the good of the order?
It seems like this is underpriced, right? I mean, like if the actual yield that IBGT is getting is about 290%, and this is pricing it at 190.
That is why we see this 2000% here.
Oh, yep. That makes sense. Okay.
So right now, like if these stayed the same, right? So if IBGT stayed at 300% roughly, and the IY stayed at 190, and you were holding the YT, that means every time there's a payout of yield to the YT holders, that would annualize on the principal of the YT asset to 2,116% APY. So that's probably, I think we just looked at it like, what was it?
It's 290, I think.
300% APR?
Yep, exactly.
Is that right? Yeah, roughly 300% APR. So Still pretty good, but like not mind blowing. It's roughly what you're getting just having the just holding. Anyways, it should be higher, shouldn't it? Shouldn't it be higher than it doesn't matter. That's what you're getting, and then you could APY it. So that's all for today. Thank you for watching, and have a wonderful rest of your